Welcome to Daily Tax Savings. This is Tony Novak here to share a few points on saving taxes and staying out of tax trouble. Let's jump right in. Today's topic is unexpected tax return. What do you do? What do you need to be concerned about if you get an unexpected tax return? Well, it used to be, we've all heard those stories. You receive a unexpected check in the mail from any source, and a person cashes it, spends the money, and they get in trouble for it. They should have known that that was a mistake and that was not legitimate. It's the old, bag of money fell off the back of a truck, so I picked it up and spent it. The presumption is that the individual should have known that that's not a legitimate situation. That exact situation doesn't exist anymore because the IRS doesn't send out checks anymore. They're doing electronic transactions. So if a unexpected deposit shows up in your bank account and it says from IRS or from state treasury, what's our risk? What's our liability? Let me talk about the same concept applies. If you know that it's a mistake or reasonably should have expected it's a mistake, you have an obligation to not spend it and do a little further investigation. But I want to point out that there is no legal obligation on the part of the tax preparer or the CPA under IRS. So it's called Circular 230 for tax preparers or AICPA Standards of Professional Conduct for CPAs, unless we expect or anticipate or suspect that a refund transaction is an error, and there's even a statement about substantiality, that it's a substantial overstatement of adjustment. Then we do have an obligation to say something. Otherwise, I'm not going to look into it unless the client wants me to look into it. In this case, what prompted this episode is that a client received a $7,000 unexpected IRS refund. And the thing is that the IRS sends a notice, hey, we're giving you this refund, but they don't say why. They don't always send the letter that may explain the reason, the details, the adjustment, the source may come later, or in some cases might not come at all. But in any event, the concern is, do we have an obligation to investigate this? In this case, this is a business owner where there are multiple moving parts. There are net operating loss carry forwards. There was real estate purchases. There may well be tax credits. It could span multiple years. And I looked at the tax return for the year that the refunds, I didn't see what could have generated. No number that I saw could have generated that. So in short, I'm not going to worry about it. If we get an explanation, if we get a follow-up letter, sure, I'll look at it and see if it matches up with the facts. But as it is, particularly for a business owner with multiple moving parts and multiple reasons, there is no obligation. We shouldn't panic that an unexpected tax refund came and will be electronically deposited. In this case, by the time I saw the letter, it probably already was deposited. In any event, we'd love to hear if you have any thoughts, comments, or feedback on this topic of unexpected refunds, or if you have another situation you want to talk about privately with me, that's easy to do also. Go to the website taxproblems.cpa, and my contact information is there. By the way, I got rid of Calendly. I was using that to book calls, and I just got rid of it. It just says, send me a text and we'll arrange a call. Simple as that. So hopefully that's a little simpler and makes life easier for everybody going forward. All right, I will be back tomorrow with another